Hello friends, welcome to our video. Today we'll discuss the meaning of pips in Forex transactions. So let's get going. Forex rates are usually quoted to the 4th decimal place for pairs that do not involve the JPY. For example, the USD SGD can be quoted as 1.4568. Quotes involving the JPY are different as they are quoted up to 2 decimal places. For example, USD JPY can be quoted as 150.25. For quotes up to 4 decimal places, the last digit of the quote is called percentage in point or a pip. That is 1 pip is equal to 0.0001. Therefore, a pip is equal to 1 divided by 100 of 100, that is 1 by 10,000. And note that the pip is not exactly the same as a basis point. We will explain this later. For quotes involving the JPY, 1 pip is equal to 0.01. which is equal to 1 by 100. You must remember this peculiarity. You can even have an additional decimal point in quotes, that is the 5th decimal point in a quote of pairs not involving the JPY, and a 3rd decimal point in the quotes which involve the JPY. This is the 5th or the 3rd decimal point in the respective quotes, and it is called the pipette. For example, Euro USD can be quoted as 1.16523, and in this quote 2 is the place for a pip and 3 is the place for a pipette. Suppose Euro USD moves from 1.16523 to 1.16554. It has moved by 0.00031, which is a 3 pips and a 1 pipette move. Let's discuss some example to understand the concept of pips better. Let's start with pairs that do not involve the JPY. For currency pairs not involving the JPY, such as the USD SGD, the value of a pip is 1 upon 10,000 divided by the exchange rate. This is because such pairs are quoted up to 4 decimals. Therefore, if USD SGD is 1.3456, the value of 1 pip is US dollars 0.0001 divided by 1.3456, which is equal to US dollars 0.00007. Note that this formula gives the value of the pip in terms of the base currency. If you multiply this value with the exchange rate, you will get the value of the pip in terms of the counter currency, that is Singapore dollars in this case. That is 1 pip is equal to Singapore dollar 0.0001, which is equal to 1.3456 into 0.00007. If a trader bought USD Singapore dollars at 1.3456 and sold it at 1.3256, he lost 0.02 or 0.0200 into 10,000, which is equal to 200 pips. Basically, 0.0001 means 1 pip. A 100 pip down move from USD SGD 1.3456 will be a move to 1.3456 minus 100 divided by 10,000, which is equal to USD SGD 1.3356. This is because 100 divided by 10,000 is 0.01. If a trader bought 1 million USD SGD at 1.3456, he would have lost Singapore dollars 1.3456 minus 1.3356 into 1 million, which is equal to Singapore dollar 10,000. Alternatively, we can calculate as follows. 1 pip is 0.0001 divided by 1.3456 US dollars. For 1 million US dollars, the value of 1 pip is equal to 1 million into 0.0001 divided by 1.3456. For a 100 pip down move, the USD loss value will be USD 100 into 1 million into 0.0001 divided by 1.3456, which is USD 7431.63. Now at the exchange rate of 1.3456, this USD amount is equal to Singapore dollars 7431.63 into 1.3456, which is Singapore dollar 10,000, which is the loss which we had calculated earlier. Note that we are dividing with 1.3456, which is the original exchange rate. Now let's discuss pairs involving the JPY. For currency pairs involving the JPY, such as the Euro JPY or the USD JPY, the value of a pip is 1 by 100 divided by the exchange rate. This is because JPY pairs are quoted up to 2 decimals. Therefore, if Euro JPY is 150.00, the value of 1 pip is Euro 0.01 divided by 150, which is Euro 0.00007. This formula gives the value of a pip in terms of the base currency. If you multiply this with the exchange rate, you will get the value of the pip in terms of the counter currency. That is 1 pip is equal to JPY 0.01, which is equal to 150 into 0.00007. If a trader bought USD JPY at 150.23 and sold it at 150.55, he made 0.32 points, or 0.32 into 100 pips, which is equal to 32 pips. Basically 0.01 means 1 pip. A 3 pip downward move means that the USD JPY will move from, say, a rate of 150 to 150 minus 3 into 0.01, which is 149.97. If a trader bought 1 million USD, then he would have lost JPY 0.03 into 1 million, which is JPY 30,000. Alternatively, we can calculate as follows. The value of 1 pip at USD JPY 150 is equal to USD 0.01 divided by 150. For a USD 1 million position, the value of 3 pips gain is equal to 3 into 1 million into 0.01 divided by 150, which is USD 200, which is equivalent to JPY 200 into 150, which is JPY 30,000, the figure we had calculated earlier. Also note that a pip is not the same as a basis point, although both seem to be the same. A pip is a 0.0001 move in the non-JPY currency pair, or a 0.01 move in a currency pair involving JPY. A move of 1 basis point is a 0.01% move in an exchange rate. For example, if USD SGD is 1.3456, a 100 pip upward move is equal to move to 1.3456 plus 100 into 0.0001, which is 1.3556. On the other hand, a 100 basis points upward move is a 1% upward move from 1.3456 to 1.3456 into 1 plus 1%, which is equal to 1.3590. So don't confuse the two terms simply because mathematically they end up as 0.0001 for currency pairs which are quoted up to 4 decimal places. As we know, 1 basis point is 1 by 100th of a percent, which is 1 by 100 into 1 by 100, which is again 0.0001. Basically, to calculate a 1 pip move, you simply add or subtract 0.0001 to the exchange rate. To calculate a 1 basis point up move, for example, you multiply the exchange rate with 1 plus 1 divided by 10,000, or 1.0001. Note that some people do use the terms pips and BPS interchangeably. Remember, the term basis point is more relevant for interest rates and the term pips is more relevant to Forex. That's it. Thanks for watching and happy learning.